Hi friends, welcome to our channel Stock Informer. Let's dive into today's stock discussion.
Hey everyone and welcome back to the channel. If you're looking for hidden gems in the banking sector or just trying to understand what's happening with your existing investments, you're in the right place. Today, we're doing a deep dive into Karnataka Bank. Is this often overlooked bank a fantastic value play, or are there underlying risks? We'll break down its latest financial results, what management is saying, and key news, all in plain English. Let's get started. First up, let's talk about the numbers from the last 4 quarters. Think of these as the bank's report card, the good news. Profits are growing. In the latest quarter, their net profit jumped over 9% from the previous quarter. That shows good momentum. Asset quality is improving. Their bad loans or NPAs are actually coming down. Both gross and net NPAs improved this quarter, which means the bank is getting better at recovering money and lending to reliable customers. This is a big plus for any bank. Now the bad news, or at least something to watch, interest income is dipping. Their main income source, net interest income, has actually declined a bit over the last few quarters. This means they're paying more to borrow money, deposits, than they're earning from lending it out. It's a common challenge for many banks right now, but something we need to keep an eye on. So what's the bank's leadership saying about these numbers and their future plans? I've gone through their recent investor calls, and here's the gist. Focus on RAM. They are really pushing to grow their RAM segment. That's retail, agriculture and MSME, small and medium businesses. Why? Because these loans usually give the bank higher profits and are less risky than big corporate loans. Better profits. Ahead, management is confident that their profitability will improve in the coming quarters. They believe by focusing on these RAM loans and bringing in more stable, cheaper retail deposits, they can boost their margins. Strong foundation. Good news on the safety front. The bank has a very strong capital cushion and lots of liquidity, meaning they have plenty of cash to handle any unexpected situations. This is crucial for any bank's stability. In the last year, one of the most important pieces of news for Karnataka Bank was about its leadership. They've just appointed a new MD and CEO, Mr. Raghavendra Srinivas Bhatt. This is a significant development because there was a period of uncertainty after the previous CEO resigned. Why does this matter? A stable and clear leadership team is absolutely critical for any company, especially a bank. This new appointment, even if for a shorter term initially, removes a big question mark and should help the bank execute its strategies more effectively. It brings much needed stability. So with all this information, is Karnataka Bank an undervalued gem? Or is there a reason it's trading so cheaply? Right now, the bank is trading at a very low valuation. Its price to earnings PE ratio is around 5.7 times, which is quite low compared to many other banks. And its price to book PB ratio is even lower, at about 0.55 times. This essentially means the market is valuing the bank at less than half of what its assets are actually worth on paper. My takeaway. These numbers suggest the stock is undervalued compared to the broader banking sector. Here's the summary. Strengths. Good asset quality, strong capital, a clear strategy to grow higher profit loans, and finally, stable leadership. Things to watch. The pressure on their main interest income, NII, and the need to show consistent business growth. Karnataka Bank is clearly in a transition phase. It looks like a classic value stock that's trying to improve its core business. If they can successfully implement their RAM strategy and stabilize their net interest income, we could see a re-rating of the stock. What do you think about Karnataka Bank? Let me know in the comments below. Don't forget to like this video and subscribe for more in-depth stock analysis. Thanks for watching, and I'll see you in the next one.
That's all for today's market update. If you gained valuable insights, please consider liking this video. For continuous access to our expert analysis on Indian share market results and announcements, be sure to subscribe to the channel. Your support by sharing this video with your network is also highly valued. Thank you for tuning in.